Hey guys, this is Harchinth from 3-Tier Investing. We're going to be bringing a walkthrough on this 27% play that I completed in 4 minutes. So the goal of today's video is to guide you guys through the mentality that I carried, explain what I was looking at, and give you guys the opportunity to learn from this so that you can recreate this in your day-to-day. Now, a little bit about my strategy. I am a day trader, so my focus is on scalping. I don't focus on the whole move. For example, if somebody were looking at this position, they'd most likely see, oh, optimally I'd enter here, I'd exit here. But really, scalping is about just getting a piece of the pie and not the whole pie. And the purpose of this is that you'll be able to recreate this step multiple times to get those profits that you're looking for. So, most people would say, okay, hey, this is supposed to be 100% play, but really we look for 25% plays 4 times. So you can see that just real quick, there would be a scalp opportunity here, and then you could scalp on the way up. But if you're literally just looking for puts, there's something here. You could scalp here. And obviously, it's very easy to say in hindsight. But if we delete these, this is the exact play that we did take care of within the 3-Tier Investing chat. So we do these live classes every single day. Just in case you're interested, the link is in the bio. It's completely free to join. As of right now, we're not charging for anything, so take full advantage. I can't promise it's always going to be like that, but our goal right now is to educate as many people as we can, and that's exactly what we're doing here. So when I was looking at PayPal on the 12th of January, 2022, I'd noticed that the market was pretty bearish throughout the day. So the first thing I'd seen, but I did not put this level here, is that we'd basically found our way down and we'd built a bit of a base here. So this would have been a nice scalp, but I also saw that this was a previous level that I carried. So because of that, I wanted to see how the stock would interact at this price. Now, what you'll see with a lot of these candles is that some of them have very big bodies, some of them have very tiny bodies. And for those of you who are new and are getting used to candle theory, essentially the bigger the body is, the more strength there is within that candle. And what I mean by that is it's about relativity. So there's 2 parts of a candle. There's the body and then there's the wick. The wick is essentially the stick that extends outside of this body. So the more wick to body ratio there is, the more volatility. And what I mean by that is take a look at this candle. Within this 1 minute, the price went all the way up to 189.23 and all the way down to 188.52. Now, if you're wondering where I got those exact numbers, if you look up here on Thinkorswim, we have the day, the time, the open, the high, the low, the close, and then these are like regression models. I'm not really worried about those. I never use those. But what we can see here is whenever there's a lot of volatility in a very thin body, I take it as a sign that there's a potential reversal coming soon. And the way to confirm that is usually through active trader. This is like, in layman's terms, it's like an easier version of the tape. You get to see these orders in real time. They can help you understand the momentum of the stock. And it's really useful if you can get used to them because it gives you confidence in your play as well. So when we approached this level, I started seeing a lot of volatility. And in terms of indicators that I'm using, the green one here is the 9 EMA. The red is the 21, and then this turquoise one is 50. So these 2 I use on a very short-term basis, and they don't make my decisions for me, but they do help me understand where there's support and resistance within a stock. Now, what you'll see most of the time, and you can see this as an example with PayPal, is that the stock will normally use the 21 EMA and the 9 EMAs as a resistance. So if it's completely below the 9 EMA, it's a strong bear case. And you would usually use the 21 EMA as your stop loss. But over here, where you have it using the 21 EMA, you'd probably want to look for either levels or you'd want to use the 50 EMA as your stop loss. So that's just one example of how I use those. But when I'm playing something in the live market, I try to take a look at the VWAP. Now, for those of you who don't know what VWAP is, it's essentially this indicator that's used by real institutions to decide where the perfect price with the stock is. So you have these upper bounds and these lower bounds and this middle bound here. So it may start to look a little confusing with all these lines, but in a situation like this, we can see that the middle line is actually going to be a bit of a resistance at this point. So I saw that we had crossed our 9, our 21, and our middle VWAP line. So I wanted to see how sustainable that was. And through momentum, I was able to see we were slowly getting weaker and weaker as we got to this level. So the goal was, if it fails to cross any higher than this level, then we get ready. So this is where we start paying attention to the trade, get our contracts ready, put in your work order, and then the moment it fell below the green and the red EMAs, that's when you have confirmation that, okay, it has fallen below. You can see with this candle, it went below and then it came right back up. So based on where a candle closes, that can give you a pretty good understanding of how the stock is going to move next. Now, normally what I'd see is that, okay, if it wicks below and then closes above these lines, there wasn't enough bear strength for us to close below, which means that it may be a little tougher, not impossible, but a little tougher for us to keep going. Then when I saw this candle start moving, we saw higher volume, right? And I saw that through the momentum. And then from here, I entered my contracts. Actually, I entered a little early here, and then we rode it all the way down to about 187.25. So, within 4 minutes, 5 minutes-ish, we were out of the play. And what did we see here? The same level that I didn't mark before. That was more of intuition in that moment where I saw this huge drop and I just knew that it was going to be really tough. So even though this line wasn't drawn, as a trader, you get used to certain levels and you get used to seeing, okay, well, it failed here last time. There's a chance it's going to fail here. Stocks are essentially patternistic. They follow patterns is what I'm trying to say. So if you can kind of predict based on what happened in the past, it can save you. So within 4 minutes, we were out, and this was a 27% move. On the screen, you're going to see details of the contract, and you're going to see all of the chat information that we sent out, just because, there are some people who are going to be like, oh my God, you never sent this out. Yeah, whatever. All right. So hopefully that explains what we saw here. It's actually very simple, but the main thing is you need trust in yourself, you need that confidence, and you need to trust the markets and your analysis. As soon as you do that, all that matters is you trust what you're seeing on the charts and you follow momentum. If you go with the flow, you're going to be just fine, right? There's this concept of market movers, institutions who have billions and billions of dollars. Once the market humbles you a couple times and you realize you're not, there's words you can use here. It's really good for you to understand that, because your goal doesn't become, oh yeah, I should have been right. It's not an ego game. It's a strategy game. And that's really the main thing that I want to offer for advice to people. So with that being said, that's all I have for today's video. If you have any questions, if something wasn't clear, please leave a comment and we'll do our best to explain everything. But with that, guys, keep learning, keep loving, keep growing, and have a wonderful day. Take care.